With the election just 1 week away and housing policies at the forefront, today we are reviewing the NDP's housing policy and share our insights and thoughts therein. Last week, we went over the Conservatives' party policies when it comes to housing. And if you missed that one, it's just last week's video. Go check that out, as it is pretty interesting as well and good to have that comparison. On top of that, we have updated mortgage arrears data, fresh USA inflation print, new rental details, and the CMHC has updated their lending policies about a week after updating their lending policies. Let's dive right in right now. So today, the NDP platform. Housing is definitely key for them as well. Okay, there's a 66-page action plan, and right at the top is housing. Let's start with their first initiative. It's the kind of their flagship, if you will. So I'm going to go on a little bit on this one, but I think it's important to dissect it and get a good understanding of what's really happening here. Okay, opening the door for first-time homebuyers. Reading it verbatim here. We're reducing the upfront costs of buying a home for tens of thousands of first-time homebuyers. With our plan, buyers will only pay 60% of their unit's price initially. The remaining 40% is due only when they sell or after 25 years, and the equity in their home has grown. Weird that it has that statement. I mean, 25 years, chances are high that it will grow. But it's like, what, do you only pay that if your equity does grow and it doesn't go backwards? Anyway, let's move on. So they're essentially offering funding for 40% of the cost of market housing for 25,000 future units, right? This is for pre-sales only is what they're going to get to here. Government would supplement the buyer's mortgage with parallel financing to offset the purchase cost. Okay, the buyer would pay interest on the government's funding portion and owe the outstanding balance plus 40% of the capital gains upon a future sale. Okay, so you don't realize the appreciation from the 40% that the government is funding, even though you get the ability to pay the interest on the part that they get to see the upside from. A buyer under this initiative only needs a 5% deposit on 60% of that market purchase price. The initial units are going to be on leasehold land. Okay, this is a nation's owned land with a 99-year strata leasehold agreement in place. The initiative also applies only to the original first-time purchase of that unit, and when they go to sell it, the next buyer has to pay full pump. All right, so what's the eligibility? If this sounds good to you, you're like, great, I definitely want to take advantage of this. How do I do it? Do I qualify? Well, here we go. A buyer must have a total annual household income less than $132,000 and assets less than $150K to be eligible for the studio and one-bed leasehold homes. Okay, buyers must have an annual household income less than $192,000 and household assets less than $250,000 to qualify for the 2 or 3 bed homes. You must be a Canadian citizenship or a PR. You must have lived in BC for the last 2 years. You must be at least 18 years old, and you must not own any other property anywhere in the world at the time of closing. You must also qualify or pre-qualify for that mortgage and must have a minimum deposit of at least 5% of the value equal to that 60%. There is no mention here if you have to qualify for CMHC financing, but I'm guessing the lender would make you qualify. And of course, you have to use it as your principal residence. Let's move ahead to pricing here because this is a bit wild. They're saying the average or market price for a studio, 400 square foot studio, is $620,000 on leasehold land. 1 beds are $850,000, 2 beds are $1.3 million, and a 3-bedroom home is $1.5 million pre-sale on leasehold land. So let me just put one thing into context for you here, because according to their rules, if you earn double the average BC salary, which is about $62,000 a year, meaning you earn up to $130,000 per year, then you qualify as being low income enough to afford a 400 square foot leasehold apartment priced at $620,000. Absurd. Like, it freaks me out just saying that. Those numbers just seem absolutely wrong to me. Like, imagine sharing this program to someone in the States where their average home price is half of what we pay for a 400 square foot studio in Vancouver. Moving on. These prices, while they probably do sound absurd, they're actually in line with market value. This is largely because when we look for leasehold properties in the area, and this is Vancouver West we're talking about, the closest ones are out at like UBC. And even resale in the area, which I'll tell you here, they're the Attainable Housing Initiative, which they're calling it. We'll see approximately 2,600 homes right out of the gate here being built at the Heatherlands, which is about a 21-acre plot located between West 33rd and 37th along Heather Street. Okay, so it's a nice area, right? This is a desirable spot. Resale right now, today, in that area, studios are going for $735K. One bed's $840, two beds $1.2, three beds $1.8. So yes, those are freehold, but you get an idea. These prices actually aren't that out of line compared to what they're estimating here on the government site. These studios and like one beds, two beds, they're averaging over $1,400 a foot for these new units. Okay, real quick though, let's run through the numbers to get an understanding of how much of a bonus this is, right? I mean, let's target the two bed first because it's most likely what families are going to be able to afford and want to buy the most. So we're starting with a 1.3 purchase price. At 60%, the buyer is looking at $780,000, okay? 5% deposit on that is $39,000. And your mortgage will be $741,000. Your mortgage payment today at the 4.5% interest rate is about $4,100 per month. But don't forget, you are also paying the interest payments on the government funded portion of 40%. So you're adding another $1,950 to your payment. Total monthly payment with this subsidy for a two bedroom is $6,050 per month. Without that program, okay, you're going to go out and you're going to buy a two bedroom at 1.3 using the new CMHC rules, which allow you to buy up to 1.5. Okay, we're looking at that program, which starts in a few months here. Your down payment is $105,000. Okay, so that is $66,000 less than the program. Okay, and this could very well be the make or break for some people. Let's be honest here, right? And then your mortgage is about $6,600. So about $500 to $600 less per month than the program offers. But of course, you own 100% of that freehold property compared to 60% of a leasehold. Either way, if that helps you get in, fantastic. Because let's look at the exit, okay? Let's pretend you hold for 10 years. The last 10 years, if we look back in history, the last 10 years in that area saw home prices go up 70%. If you think that's too high, we can go back the previous 10 years, 2004 and 14, but no, they went up 100% then. So let's use the lower one and say that $1.3 million home in 10 years from now is now worth 2.2. But you say, wait, Dan, you said these are on leasehold land. Yes, they are. And super quick story. I did a bunch of research on leasehold versus freehold appreciation rates in Vancouver going back as far as the data goes. That include leasehold for University of BC, SFU, native land, and city-owned leases. And shockingly, leasehold land or leasehold properties go up at a very similar appreciation rate to freehold. I was very surprised, but found it in all four areas. So we're going to pretend it's verbatim for the sake of this argument. Okay, so your initial 60% ownership of $780K is now worth $1.33 million. Okay, so you've seen your property appreciate $540,000, and this is tax-free. Okay, you got tax-free equity in 10 years of over $500,000. To me, that's much better than renting and savings. The government, who loaned you 40% of the 1.3, they're $520K, they receive a nice little profit of $360,000. Now, I'm in favor of this, and I think it will absolutely help a very small number of families. But let's be honest, this does nothing to help bring down home prices. Once again, it's a policy to help more people buy market value homes, right? Homes must retain their value, says Trudeau, and this is a policy to help maintain that mandate.
Wow. It sounds interesting, but if I'm going to be completely honest, it's also quite confusing. And it really doesn't, I think there would be a lot of private lenders who would go down this road with you as well. If you're looking for 40%, not having to pay any carrying costs or interest, I just want to be clear. This will help a small group of people, I think, get into market homes, like you said, Dan. But really, this helps the government more than anyone else. They're the ones who get the most out of this because they're going to fund your purchase with taxpayer dollars or dollars that they're printing. So either way, they're not paying for it. They're just participating in the upside. That's it. And that is a great deal for them. So I would just venture to look at maybe some other ways of making things more affordable. Like, what about just lowering people's taxes so they have more money and they can spend it on, what's in the marketplace? But anyhow, let's keep going in the interest of time here. So the next policy here is cracking down on housing speculators and flippers. So homes are for people. This is from the NDP website, not for turning artificially inflated profits. That's why we're expanding our speculation tax and clamping down on home flipping, which both leave potential home buyers out in the cold. Okay, well, I disagree, and I firmly disagree, to be quite honest. There's fewer upgraded properties is what ends up happening here. So a lot of Vancouver's stock outside of the pre-sale world is old. And we're talking like 50 to 70 years old. There's condo buildings that are from the 70s, 60s, 50s, 40s. There's a ton of inventory that would benefit tremendously from a lot of some renovation here. Home flippers often invest in upgrading older or poorly maintained homes, and this policy discourages any activity that would lead to a decrease in the available of well-renovated homes, leaving potential buyers with fewer options in terms of quality. Now, if you go and look at the market today, for example, one of the things that we've said is there's plenty of inventory on the marketplace right now, but a lot of it is low quality. It's not great stuff. Well, would it be better if we were in fact dealing with renovated spaces? Likely. This will also lead to slower development. So speculation and flipping often incentivizes developers to build more housing units. So by restricting these activities, there will be less incentive for new construction, leading to a slower increase in the overall housing supply. It's an inconvenient truth, but it's part of it. Investors will also withdraw from the market space. They already have, and they'll continue to do that. Policies like expanding the spec tax will discourage investment, and it's these investors who often contribute to the financing of new housing stock. Without this capital, fewer projects will get off the ground, and that's just a reality. We need investment dollars from the private sector to build housing for the people that want to live in it. This is a reality. Reduced numbers of transactions. So policies targeting home flippers will reduce the number of transactions, making it harder for sellers to find buyers and buyers to access new quality properties. It's already difficult in an especially tight market. A couple last pieces here. We've got lower mobility. So if homeowners anticipate being hit with higher taxes and penalties, they will be less likely to sell, less likely to move, and less likely to renovate. It decreases the overall market flexibility and doesn't allow for any new business. Decreased property transfer tax. This is what doesn't, which gets me. We're talking about being in a deficit here of $5 billion and a projected $9 billion deficit. We need revenue. This is a great way to generate revenue. But fewer transactions will actually result because of this, and that'll decrease revenue from property transfer tax for the government to invest in infrastructure and overall housing market supply. So I just don't agree with it. I think that the market will determine whether or not profits are acceptable based on the renovation that's been done. A lot of realtors, a lot of people out there will understand the value based on the cost of the renovation. Why are we beating up plumbers? And why are we beating up people who are trying to make an extra dollar here, who are investing in their own future and taking on their own risks? I just don't understand this. This is a free capital market, and we should be encouraging this kind of thing. And the market will help determine whether or not those profits are acceptable or not.
Yep, totally agree with your stance there, Ryan. Moving on to their next policy, it is called Driving the Construction of Lower Cost Middle Class Homes. By growing BC's own factory-built home construction industry, everyone from multi-generational families to municipalities can build single homes, duplexes, and triplexes on land they already own more affordably and in as little as 12 weeks. Okay, well, I couldn't find any more specifics on this, but initially, I totally agree. Okay, when he's talking about factory-built homes, to me that largely means, speeding up obviously the construction time, but we're talking largely about modular homes here. And I'm of the belief that modular homes are basically about to, if they haven't already, hit a tipping point in the sort of acceptance of them, right? Historically, modular homes kind of have a bit of a stigma to them, but moving forward, the quality and the design and the construction and the livabilities of these now is absolutely on par with a lot of the other homes in the marketplace. So if you can build these things in 6 to 8 weeks and get them up and running in, let's say, under 2 months, 100% let's go down this path. A lot of these are steel construction, by the way, and might even last longer than a lot of the stick builds that's going up today. The time frame, like I said, it's going from, let's say, the average 2-year time span, to put up a duplex to now maybe 2 months. This is something that our group is actually exploring quite seriously and plotting or finding some land right now to potentially build these on. Why he said in this, or why the NDP said targeting on land they already own, I'm not quite sure what that means. It's a little short-sighted. I mean, entire communities could be built modular. Let's be honest here. A single family lot can see 6 units under current zoning in some areas. So I'm all in for this. I just wish I had a little bit more depth, maybe some tax incentives to go BC built. But either way, this is leaning in the right direction, and I would like to see this kind of take shape.
Yeah, I'm all for it. I mean, I think the stigma that has attached itself to modular homes is primarily because we're used to seeing double wides and trailer parks that have the association, mostly because those were built in factories and delivered to the site. But they're still built with the same wood, or they're still built with the same steel that would go in your property today. And there's a lot of different ways of using technology to lower cost. This is one of them and should be explored way more. I'm very much for this. With that being said, let's look at prioritizing housing for public land. So this is, again, right off of the NDP website. We'll never sell public land that is suitable for attaining housing to be built on. Instead, we'll partner with the nonprofit and private sector to build attainable middle-income housing. Oh boy. For me, this is very short-sighted. So let's kind of look at the pros and the cons. There's really only kind of one pro in my mind to this, and that's that if the government does retain public land, it's better for a long-term plan. This is a long-term idea here, because if they hold the land and they'll build and build for less on that land, then yeah, it could result in overall lower prices and some form of longer-term affordability. And it also reduces the risk of these lands being used for something else that doesn't benefit or doesn't help with the housing crisis. But I think there's more cons than pros here. And let's just talk about maybe the complexity of the partnerships here. And while it sounds promising to say, hey, listen, we're going to partner with this guy and this guy and this guy, it's a lot of promises and not a lot of actual action. I haven't heard from BOSAs of the world or Concert Properties or Polygon Homes that they're partnering with the province to build anything. It's just a promise at this point. So there's that. And negotiations for these things between private entities and between public ones and nonprofits, they'll all be conflicting because each party wants something different. The private sector is focused on creating, sound products that create a return so that they can go and do it again. Nonprofits will have a different perspective and the government will have its own perspective. So how do you continuously align these, right? It's going to be very difficult to do. There's limited financial flexibility here. Given the economic downturn and strained government finances we find ourselves in, not selling public land to generate immediate revenue to fund a project or something to that effect is, again, quite short-sighted. We might need to sell something, sell an asset so that you can build something over here. It seems a little short-sighted here. I honestly think that this is just going to lack private sector interest at the end of the day. If profitability margins are not met, or if the policy restrictions are too tight, and they likely will be if they're run by nonprofits or the government, then private sector developers will just avoid this, altogether. I don't see why they would take this on when there's just simply other markets that they could go and participate in. This will leave the burden to the government and nonprofits, and we've already done that, and we know where it's going. So if history is any indication of the future, this idea doesn't isn't very promising to me, and it's short-sighted. It doesn't look at the whole perspective. It just sounds like a campaign promise. So that's where I'm at.
Okay, next up, they have the policy of driving more rental home construction. They say, encouraging municipalities to get more market rental housing built with an infrastructure fund tied to housing starts. Waiving provincial property taxes for new purpose-built rental projects. Building more homes and prioritizing new housing around transit stations. I mean, yeah, sure. This is all good, right? It's all great. And I think maybe a look into history here. I mean, these programs have largely existed in similar forms basically since the 70s, right? There was a CMHC program that was so good. We saw the largest growth in rental construction from the 70s to, I think, the mid 80s. It's still in use today, their incentive, which I think is as much as a 95% loan to value for construction. But they have since kind of moved the goalposts and made it harder, especially in places like Vancouver, to qualify for this funding. So they're basically just saying, let's make it accessible again, but obviously a different government body. I'm all for it. Again, I just think it needs to be a little bit more defined. And realistically, it's largely in the Conservative plan as well. So it's just same thing with a slightly different name. But overall, yeah, let's move forward with that.
Okay, let's touch on the next one. Fueling the construction for non-market housing. So people in BC are paying too much for rent. In fact, 25% of renters are spending more than half their monthly income on it. We'll provide more land for non-market and co-op housing, build more homes on it, and help nonprofits take care of those homes. Again, a big promise with very, very short detail. Where is all this land that they're talking about providing? I mean, unless it's going to have some sort of light rapid transit connecting, the major centers that already exist to this new land, then where's that part? Because I don't see that. And non-market housing, when you think of it singularly, it does work. However, the amount of adoption required for it to take place is enormous. And it's just not a reality based on the way things currently are. I mean, why wouldn't we look at things like, how about we lower income tax rates so people keep more of what they make so they can pay what the market will bear? I mean, that could also be an option. Unfortunately, rent control has done very little to reduce rental figures and keep them low. So I have a hard time believing that more non-market rentals or co-op housing will do this, because you need to have it en masse in order for this to bring down all the rental rates. The potential need for long-term subsidies, this is where things get a little problematic. Non-market housing often requires ongoing government subsidies to keep rents affordable, which could be financially challenging if the government revenues decline or the current economic situation we find ourselves in gets worse. So where is the money, the revenue side of this coming from in order to offset the cost of housing? Hint, it's taxes. Limited immediate impact on long-term development timelines. So building new housing units under the co-op or nonprofit models is usually slow because it's complex in its planning, approvals, and financing. So this means the policy might not offer, well, it won't offer immediate renters struggling with the high cost of rent. Let's be honest. If you know a new project is coming out in the next 2 years, well, how long does it take to build a tower in Vancouver? 4 to 6 years. So if you're renting something now and it's unaffordable, and your new property is coming in 4 to 6 years that's going to be affordable, how are you going to get there? How are you going to get to that next 4 to 6 years? You got to make more money, right? It just doesn't solve the problem right away. There's a few more here. Potential for market distortion. So expanding non-market housing could reduce the overall profitability from private renters and investors. This potentially discourages investment on new rental construction because the private sector won't benefit from it. And this will lead to a reduction in the overall rental supply because we need those investors. Those investors will help fund those things faster. And right now, this plan, like I said, it works on mass adoption, but we currently don't have that in our system. So this idea is going to take 50 years before it really has any kind of value.
Okay, next up, they have a policy in regards to doubling the construction apprenticeship training. In order that BC has the supply of Red Seal certified workers required to build the tens of thousands of homes we need every year. I mean, ultimately, yes, this is great. We know that we have a shortage of skilled trades workers in this province. And it was especially noted during COVID. You know, if you were trying to do a home renovation, it was incredibly hard to find contractors to come do your job. And if they did, their prices were extremely elevated because the demand was so high. And realistically, I think it's cyclical, and we're going to see that problem once again. So the idea here is good. I'd like to see them go even bigger. You know what I mean? Like maybe there's other incentives for other types of workers in the housing trades that maybe aren't Red Seal certified. You know, can we give them, I don't know, rent incentives, tax incentives, whatever it is, right? Because what happens is many of the workers that come in to build homes in Vancouver are commuting an hour, hour and a half, 2 hours sometimes. And you'll find that same trade worker is charging more in Vancouver than they would in, let's say, the Valley. And I think the reasons are pretty obvious as to why, right? They got their own costs to cover. So if we can find a way to get more workers localized or offset their costs so we can keep construction costs lower in the more densified areas, this would be great. So I'm all for it. You know, devil's in the details, but yeah, please, let's see this one come into effect.
Yeah, it's really needed. Let's talk here. Their next promise here is creating more and more secure homes for renters. So encourage people to rent their suites with subsidized insurance covering unexpected problems like damage and unpaid rent, protecting rental stock by replenishing the rental protection fund. This is a really big ask. You know, you're basing part of secured rentals on asking homeowners to open up their house to rent it to people they don't know and may have otherwise never thought of doing. It's a big ask, and I'm not sure this is going to be something that they can deliver on. You know, what I think would be maybe a better use of this particular part of the plan would be to maybe revisit balancing tenant and landlord rights in the province, because it's unusually unbalanced here. And if you look across Canada, there are plenty of examples where it's more balanced and it works better, because there are inherent problems with the way this is set up, and there's very little incentive here for people to participate. Let's talk about homeowner reluctance, right? Even with subsidized insurance, homeowners will remain wary of renting out their suite due to concerns over who's living in their house, property wear and tear, and just plain old other personal reasons. People just may not want other people living in their house. It's just a reality. Insurance also may not cover all the risks. So, you know, subsidized insurance might not address all the concerns that homeowners have, such as what about, you know, a huge dispute with a tenant? There's all kinds of, you know, items here. Like, what if they use the utilities and it goes well beyond what they agreed to? Is that covered in the insurance? Again, it's not quite determined here. There's high acquisition costs here too. So if we get into protecting the rental stock through the direct acquisition or intervention, it'll be financially burdensome for the government. I mean, I'm pretty sure I just heard of a story where the government spent $550 million on acquiring more rental stock. Again, that seems like a humongous investment, and I'm not quite sure how spending all of that money and then buying rental stock that is going to get rented for below rental rates is going to offset the cost. There's a balancing the budget item here that is kind of scratching my head. The cost of acquiring properties to keep them affordable will exceed the government's financial capacity. That's just a reality. You can't buy something and run it long term without it being profitable. This will lead to bigger and bigger deficit spending, more and more printing, and higher taxes to offset these costs. Simply put, you cannot rob Peter to pay Paul. It comes full circle.
Yeah, this one bugs me a bit because all they're doing is throwing money at a problem instead of addressing the problem, right? Realistically, all this screams to me is that, look, the RTB is so messed up, we can't even figure it out yet. So we'll just try to protect home buyers from the burden that's going to be, which is just so backwards to me. You know what I mean? There's a reason why people aren't renting their suites, because the tenants have too much power here, and tenants that are very educated in that power are abusing it. And so that's what's creating these problems. And they're saying, well, let's just realize that that's never going to stop. So we'll just throw money at it and say, okay, well, you can get this burdensome, tenant in your property, but when they screw up, we'll get you on the backside here with some rental relief. I don't know. It's
Also,
backwards. I don't like it at all.
what about Dan? What about there's going to be some nefarious activity here too. There's going to be people who are going to, you know, get a renovation of their basement suite based on an insurance claim that may or may not have happened or got exacerbated, right? And so, you know, I don't know how you do a lot of oversight here. Also, the insurance companies here in Vancouver, they're already well in over their head. I mean, it was only a few years ago where a lot of the strata properties went through huge insurance issues and insurance prices spiked like crazy. This is going to add to that. So do you really think that insurance prices are going to go down? As a result of this, the government is going to have to spend a tremendous amount more money. Where does it come from?
The coffers are bottomless. Haven't you learned that?
It feels like it.
It does. Okay. So look, those were the highlights. Those are the main points that we found within the NDP's platform. And if housing is what will decide your vote, well, let's do a super quick comparison here. And obviously it's just between conservatives and NDPs because that's really what it's going to come down to. Both want to speed up permitting times. Both want rezoning policies for densification. Both want new towns, which means unlocking government land. Both want rental construction incentives. Where they largely differ is Rustat wants to remove taxes on housing, which is potentially huge, but of course needs details. When we look back real quick for a little history lesson here, all the way back to 2003, the province of British Columbia took in $500 million in household-related taxes. By 2021, that had ballooned by 700%. Okay, less than 20 years later, that had shot up to $3.5 billion. Okay, that trajectory is just absolutely unreasonable. So, you know, existing homeowners and renters getting the Rustat rebate of $100 a month. Not sure if that's going to quite cover the difference, but hopefully the taxation that he wants does decrease that at least rate of growth. EB is of course helping first-time home buyers with the 60-40 plan that he's got there, but that only helps 25,000 people total over the X amount of years, right? We're starting with 2,600 apparently. Those homes won't even be ready for a couple of years now, so we're no immediate relief there, but a long-term plan. Rustat wants to reform DCCs, but basically just defer them and not really allow for massive increases, but no talk of reduction. And Rustat talked about more accountability at City Hall. Now, ultimately, neither the Conservative nor the NDP platforms have any policies aimed at lowering house prices. Neither. We just studied these in depth, and nobody says we're going to lower house prices. Neither one of them. Really, you know? So what they're doing, which is what politicians is the best they can do now, is they're offering more access to more people to market value homes. Okay. No politician, realistically, and we're seeing it here once again, will campaign on lowering home prices as the majority of their voters are homeowners, right? Saying that you're going to reduce the value of your largest asset, surefire way to lose votes. So here we are, once again. The best laid plans are helping you buy high prices homes. So either way, we hope this helps. So vote accordingly. And honestly, I think both platforms regarding housing are soft at best. But for me, I would lean towards the Conservatives because I would personally benefit just a hair more. And I guess that's why we vote, right? To help our families and ourselves. So I'm leaning Conservative on the housing policy.
For me, I don't know if I prefer either of them. I think they both suck. To be quite honest, maybe it's a bit pessimistic, but I don't see anything revolutionary here. I don't see anything that's arguably going to help. This looks like a bit of a spat between two people with a couple of ideas here on the left side and a couple on the right. Neither of it's going to transform the landscape. All of it's too light on detail, and none of it is specific enough for me to understand where the second, third, fourth, fifth order consequence will actually benefit from this. So hear me out here. I did write a little bit of a response to this because I wanted to get some thoughts out, but I started by saying, you know, I really think if we haven't done anything here to invest in technology and take a look at how technology could solve some of these problems. And I'll give you an example. This morning I went and got my coffee at Starbucks, and I went in and I did the remote app order, and I walked in, grabbed my coffee, and left. As I walked in there was a huge lineup of people, all of them on their phones, lined up, ready to make an order with the person at the till. And that reminded me of where the government was. having access to technology, having access to solutions in their hands, and yet not using it and standing in the line, waiting to do something the way it's always been done, instead of looking for ways that could universally change our path forward and bring hope and some sort of idea. But instead, we find out we're just going back and forth and banging our heads against the walls, expecting a different result. Overall, the shared equity program sounds like sanction theft to me. Folks really don't get ahead because you've got a silent partner who doesn't help you contribute to the affordability element of it, rather just helps you get invested, but then takes your profit and your ability to move up the ladder. I mean, you'll get some, but you could arguably get those returns elsewhere as well, and without somebody in your pocket. You know, I'm just, how is it fair in my mind that a 40% shareholder in the upside of an investment for folks who are trying to attain home ownership, while in the same breath saying you're going to increase co-ops and subsidize rent for others? You're taking money from one side and you're giving it to the other, and neither really benefit. We need less government intervention, in my opinion, and more market freedom and competition. We need less taxation, not more. Allow people to vote with their dollars instead of having those dollars taken from them and spent on things that only a few people think might be a good idea. Beating up house flippers, again, why is that an issue? That's a symptom of a much broader problem. The age of housing stock in Vancouver and throughout the province is a chronic issue, and it's resulted over underbuilding for the last 30 years. And it's because of bureaucratic zoning and red tape. And yet somehow we, the people who are trying to get ahead with our own lives, are the ones that get penalized for poor government decisions over the last 3 decades. Don't blame the plumber who bought an investment property, who's taking a risk, who's trying to improve it for somebody else, and who's trying to look after their family. That is not the right approach here. I also want to see more accountability. I want to see investment come back to the province and a more radical introduction of technology to help us solve some of these problems. I believe the solutions we have are out there. But right now, both parties are more focused on what the other party is doing, rather than focusing on how they intend to solve the problems that you and me have. Also, why aren't we dealing with rent control? It wasn't even touched on by the NDP, and we can't keep rent in line with the inflation problems that the government also created.
Okay, well, voting is next week, and we are basically done with politics on this podcast for some time. So hopefully that was enough to bear, but let's be honest here, right? With housing literally at the top of both platforms, we felt it was definitely important to address. Now, let's move on to the other big things that happened in housing this week, back to our regularly scheduled program. The CMHC came out once again and created a new program, which is designed to help people add suites to their existing properties. Okay. They're leveraging the recent rezoning that's taken place to allow people that live in a single family home on a lot to have up to 4 suites on them total. The CMHC will provide up to 90% loan to value up to a $2 million figure based on the final improvement price of that property. This means that after you turn your single family home into a 4-plex, it must not be worth more than $2 million. As usual, this is a national policy where over in Saskatoon, that $2 million goes very far, but in Vancouver, and it's 0% vacancy rate where we need density desperately, that $2 million doesn't even buy you the land, really. So it doesn't work here. But let's dig deeper. To qualify, you must own the property and ultimately live in at least one of the units once that conversion is done. All the units must be legal and abide by the municipal zoning and bylaws and whatnot, and you cannot short-term rent any of those units. Again, I don't really think there's going to be any absorption or adoption here in Vancouver. Places like Calgary, yeah, sure, maybe that could absolutely work in a place like that. But let's run some numbers. Let's walk through this. What could this actually look like? All right, you're in Calgary. You got a single family home valued at $800,000, and you have a $400,000 mortgage on it. You want to add 2 suites in your basement and build a laneway, okay? The cost of those improvements is, let's say, $800,000 as well. You're going to build pretty nice here. Get the Thermador stove. CMHC will lend you those funds to pay for the construction. And now you have a home that's worth maybe 1.8 with a $1.2 million mortgage. But now you have 3 income suites. Okay, so for some, will that work? Quite possibly, right? And it doesn't say anything about not being able to sell right away. So let's say you see that 200K odd lift from the reno. Can you just flip it then and make 200K? Sure, why not? So I think there are some builders that are going to help people benefit from this, but I do think it's a pretty small margin of who can actually capitalize. Now, I was trying to run the numbers, like how do you actually get to the extreme 90% loan to value on this thing? I guess if you had a 500K home, right, that you just bought, so you still have a $400,000 mortgage on it, right? You went 80% LTV. CMHC now lends you $1.4 million for construction, and now your home's worth $2 million and you've got a $1.9 million mortgage. I mean, that's some nice construction on that home, but that's kind of how you can get up to that 90% loan to value. It's got to be pretty extreme. Like I said, I do think there's going to be some creative builders who are going to offer homeowners options to improve. Overall, uptick is going to be low on this thing. And keep in mind, they are talking about CMHC financing, which means you get to pay for a premium on the insurance on this new mortgage. So you may not have a CMHC premium today, but they're being very creative in finding new sources of revenue for the government. If this interests you, it takes effect January 15th of next year. And again, we'll see the uptick, but I think this is another dud.
This is a huge risk for people too, like a massive risk. You're asking Canadians to take on way more leverage, to take on potentially doing a project they've never done or don't understand. And now you're asking them to open up their homes. So the 3.9 million or 4 million homes that the Liberals have promised they'll build was actually 3 or 4 million basement suites that are already in people's houses. Like, this is ridiculous. To me, this just doesn't add up. And I don't know how you make this ask of Canadians to say, hey, listen, we can't really figure out the housing problem. So how about you guys go into more debt? You can lever yourself some more and provide some housing for the guy beside you. This seems bizarre to me. I'm struck that this is even an idea. This doesn't seem to come from anyone who's got any kind of creative financing background. This is throwing spaghetti at the wall and seeing what sticks.
Yeah, I totally agree, Rick. Canadians are already the most levered, and they're basically giving them an option to lever more. And if you're trying to incentivize people to build rental units, maybe do it at a time when rental rates are at an all-time high. Not what's happening right now.
Yeah, I mean, Canadians are already the highest levered of any G7 nation by over 50% compared to the next country in line. And now we're adding to that? What is going on? What is with these people? Why can they not figure out a way to cut some of this debt instead of adding to it? It just seems asinine to me. Anyways, moving on to the rental report here. So Rentals.ca has come out with their October report, and there are some significant rental decreases. Vancouver is showing an 11% decrease year over year for both 1 and 2 bedrooms. Burnaby is down 8% and 11% respectively. These are 1 and 2 beds. Toronto, 8% for both. Calgary, 2% and 5%. And most major cities in Canada are seeing annual rental rates to the downside. There are a couple outliers. Quebec City and Saskatoon saw their 1 beds up 22% year over year, and with 2 beds up 10% and 22% respectively. So why is this taking place? Well, generally speaking, the country is getting slower and slower and slower in terms of its overall economic output and its gross domestic product. If you look at Ontario specifically, I believe, has an unemployment rate between 8 and 9%. So people are losing their jobs. They're not getting paid what they once were. Canada's losing investment, and those create jobs, higher paying jobs. People can pay for more rent. So for me, I feel like this is, again, symptomatic of what's taking place. With that said, though, it is also nice to see some relief in the rental space as things continue to calm down here.
Okay, moving on to the arrears rate now, because we do have some new data here. And after bouncing up and down between 0.18 and 0.19% for about the last 6 months or so, the arrears rate has increased to 0.2% nationally. This is the highest it has been dating back to May of 2021. And yes, we are still below those pre-COVID levels of 0.25, but starting to get closer here. Ontario saw a pretty significant increase here, going from 0.14 to 0.16%. Now, if you'll remember, a couple of weeks ago, we pointed out how the GTA area specifically is seeing a major spike in arrears. And so obviously that's affecting their provincial numbers. And those numbers were very much up to date, right? Whereas the data that we're sharing it's about 3-month lag on all this data to come forth. So I expect, of course, Ontario to continue to see that number increase and affect the overall arrears rate. British Columbia, looking to our home now, it remains status quo. BC is still at 0.16% arrears rate, where it has been since April. Still very strong. We're just quite simply not seeing that extreme new condo completion issue that Ontario is, right? They're just seeing thousands of condos complete that were purchased in and around the peak. And people right now are just saying, I either can't complete or obviously they are completing and they're renting and the rates are going down and they can't afford their mortgage because the expenses have gone up and they're just not paying their mortgage, and hence the arrears rates going up. I think we should all look to what's happening in Toronto with their mega completions as a lesson, right? Because it is possible to overbuild in a perfect storm, impossible to calculate a black swan event like COVID, but definitely something that I think a lot of developers are now paying attention to and probably building in those type of contingencies into their pro formas.
Yeah, and lastly here, let's touch on the USA Inflation and Jobs Report. This was quite interesting, depending on what side you're on. But the USA inflation dropped to the lowest reading since February 2021, hitting 2.4%. That's down from 2.5% in August. It's also the lowest since before it started surging post-COVID. So you'd think people would be happy about this, but not when it doesn't beat expectations. So expectations were 2.3%, so it didn't beat that, and that sent markets in a bit of a tumble as a result of that. What's more is when you exclude volatile food and energy costs, core prices, a gauge of underlying inflation, remained elevated in September, driven up by the rising costs of medical care, clothing, auto insurance, and airline fares. Core prices in September were up 3.3% from a year earlier and 0.3% from August. Economists are closely watching core prices because it typically provides and paints a better picture of the overall inflation. Just a week after a surprisingly strong jobs report, the Labor Department reported Thursday that applications for jobless claims jumped by 33,000 to 258,000 for the week of October 3rd. Now, remember, anytime you hear a jobs report, it's very important to go back and check it if you care about it in the following weeks, because they're often revised down. So you hear the announcement and then the adjustments come a few weeks later. What's more, too, is since August 5th of 2023, we are well above the 229,000 that analysts were expecting. So more people are jobless than what was expected. With inflation cooling less than expected and job numbers ping-ponging week over week, I mean, it's anyone's guess what the central bank is going to do now. That being in the States.
Yeah, data is just flying all over the place lately. Every week in real estate seems to be quite interesting, especially to nerds like us, or at least I'll call myself one. But thank you, as always, for tuning in.
I don't get the
nerd. We always appreciate your support immensely. Thank you so much for tuning in and watching. We will be here next week with far less politics and far more housing data, and wishing you a very successful weekend, and we'll see you here next week. Bye.